Welcome back to Power Lunch and today's Market Navigator. We have stocks rallying after the first of two monthly inflation gauges this week come in cooler than expected. And that brings us right to a key technical level. Let's welcome in Jessica Inskip, Director of Investor Research at stockbrokers.com. Jessica, great to have you here. I know I said this before and I love the haircut. Anyway, be that as
Thank you, Kelly.
Market, I'm trying to make a haircut reference. What's the key level that you are watching here and why?
Yeah, there's actually a couple. So I like to start taking a step back, looking at more of a 2 to 3 year chart with the SPX weekly view. So I'm looking at the 13, 26, and 40 weekly moving averages. That represents 1, 2, and 3/4 worth of prices. That 40 weekly moving average, that third quarter worth of prices at 5,100 was actually our support that we maintained last week. That's really great. This week, it's all about the 1 quarter worth of prices, that 13 weekly moving average around 54.23, which we're testing right this moment. That's 2 days of data. I need to see that on Friday, though, in order to make that consistent. So I want to close above 54.23 is the level I'm watching.
You want to close above 54.23 kind of as we move throughout the week on a weekly basis. What if we don't?
Yeah, well, then we run into an issue. So that's where I like to switch to the daily view. We can narrow it down. Really, that there's a gap down that happened, and that's the next major area of resistance. But now it's support. We've overcome that today. So in the daily view, that's a short-term momentum that we'll see. It's a bullish momentum that would signal. So that gap down is about 53.83 to 54.10. We are above that. If that's not maintained, then we're going to have a downturn. And my downturn is really thinking about the whole macro picture of we're in this cycle where we're talking about inflation, so on and so forth. The really big levels that I'm watching are the major high trends before we started into this Fed rate hike cycle. That is the big concern. So meaning if those aren't supported, then we go to the next levels. We'll go to the 26 weekly, we'll go to the 40 weekly. And if we don't stay above that higher high, then that could be a major issue for a downturn going forward. So lots of catalysts certainly ahead.
Final question as we kind of brace for what could happen to the downside. What if stocks have no problem with this and it's all in the past and we go skipping off to, nice continued gains here?
Yeah, absolutely. So then we're expecting those higher highs. Now, I definitely want to be cognizant of the NASDAQ 100. That one also has a much more room to go to get to that 13 weekly moving average. That one's around 19,275. So there's some momentum that needs to be there. And I don't see a rally without the NASDAQ 100 or those mega caps actually participating. However, the equal weight is really the gemstone that I'm seeing here. The equal weight is actually leading rather than NASDAQ 100, which is what we haven't seen before. So it's now about those other 493 securities. The equal weight is actually finding support above that 13 weekly moving average, whereas that is resistance for the mega cap or the market cap weighted S&P 500. So that's good. As long as that's maintained, that's great. But in order to see higher highs on the market cap weighted S&P 500, I have to see higher highs on the equal weight. I want to see broader participation. I want to see that breadth. It's there. It just needs to be maintained.
All right. And like you said, big tech has to be part of it. It doesn't have to be the leadership, but it's got to be part of that. Really interesting. Jessica, thanks.
Absolutely.
Really good to see you.